How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on gold versus US dollar. As you can see, that buy side liquidity pool here, that swing high on the 4th of December and the swing high here on the 29th of November has been rated, which is not something that was out of the ordinary. It was very close to price action. So instead of price continuing this bearish momentum, let's take it back for a second. For those that understand my bearish trend formula, it's pretty simple, straightforward, like price action structure. If we break a swing low, it could only mean two things. Let's play it forward. It could either mean two things. This is going to be a continuation for bearish momentum, and we're going to get a lower swing high, and price is going to continue to sell off, and we're going to get a lower swing low. Simple structure. Or this is a false break. They're getting traders to go short, but they're actually going to build in longs and push price back up. But the only way for me to say it's a false break is until it breaks a swing high now. So instead of breaking sell side and continue to take out sell side, it changes trend and reverts back to buy side. So it purged sell side here, sell side liquidity. It purged. But then what happens? Price what? Reverts back up above buy side. So it's showing a stance that it wants to probably go higher. It might eat into more of this order block, right? Back into the mean threshold or even more. It might want to go back into this PD array or get above this swing high where there's what? Orders residing, right? Sell stops residing. Correction, buy stops residing, right? That buy side liquidity pool is sitting here. Anybody that was selling, they have a protected stop loss to prevent any further buying into their position. So price may continue to push up. So we got that previous daily high marked off here, Monday's high. It gave up a lot of its gains, which is very interesting. Now, this could be like a way to show that there's still more for the market to go up. And if price were to get back up, it's like almost like a hidden smash day candle. If you're familiar with Larry Williams' teachings from his book, Long-Term Secrets to Short-Term Trading, you can see that this might be a hidden smash candle because this candle was up really high and it gave up a lot of its gains and closed down here. So just to mark that off, just so we can see in a reference on the lower time frame, let's go down to the 5-minute actually. And you'll see that was the high that it was at. And then it came down and closed down here, which is very interesting. It closed right around here. So for it to drop down like that means probably next day, right? Tuesday. It's technically still Monday. You can see it says Monday Asian session that's currently live. But on the daily chart, that Asian session is actually a part of that Tuesday's daily candle. Right? Don't be confused, right? What it is. The Tuesday daily candle is already open, but technically it's still Monday, 9:52 p.m. here in New York right now. But the Tuesday candle here is showing that it's open already. And it's looking to push probably higher and try to get here. So this could be a buy signal. You could buy on the breakout if you are speculating higher price action. But since price broke a swing high, I would simply wait for a higher swing low to form. So one, swing high broken. Step two, we have to wait for a higher swing low. Right? And the swing high being broken is bullish, if I can spell momentum. I think I spelled that wrong. Did I? Yeah, I did. And yeah, that's pretty much it. So we're going to wait for a higher swing low. Now, if we don't get a higher swing low, what you can do is wait for down days and buy into. Like I said, historically speaking, gold's been bullish for the months of December. And that might not be any different this year in 2024. So any down day could be respected as new buying positions into gold for a higher push to the upside for the end of the year. So let's just patiently wait. No trades taken yet, but I'm going to wait for certain things to play out for me to understand what the market is going to do. Now let's take a look at the DXY. Right, recently just got that new candle that opened not too long ago. But we can see we have a swing low here. And if price is going to fail to take out these highs and not continue this trend, right? Maybe this is not a false break. Maybe it is actual continuation. So instead of this low being protected, it's actually going to be a target instead. And gold may continue to push higher. And this is going to be the next target. So we're going to get some type of lower swing high. Or, again, we could see a rate up here and then it drops again. There's a lot of ways. I'm not saying there's 1,000 ways, but there's a few handful of ways things can play out. It's not always perfect, but we can speculate and play certain scenarios in our head. It could go up and continue going higher and create a higher high for the year. That's possible too. Or price could come up, fail before breaking those highs, and then sell off. And then we see gold continue to rally and support that idea of what it's doing currently. So hopefully you found this insightful. We'll be checking gold within the next couple of days to see what happens. Peace.